G'day again. Welcome to the closing bell. It's 15th of March, about midday for me, with the ASX down over 100 points on the back of iron ore currently in free fall. And hopefully you were watching a couple of weeks ago when I gave a pretty strong outlook on iron ore, saying that I thought it was about to get belted. So I just want to review that, have a look at a few of the key iron ore stocks, and I guess make the point. If you're watching these videos, you're actually the first to find out about that opportunity, because I don't really short stocks very often. Like, I haven't shorted a stock for years in my services. I sort of stick to long only because that's mostly what people are interested in. So when I saw that opportunity, I thought, well, I'll hand it out to the people who may not yet be my clients, to give them, the opportunity to, first of all, have a look at my work and the way I look at things and follow it along. Because look, why am I doing this? I'm hoping I can prove to you that the way I view things is actually pretty useful. So if you did watch that video a couple of weeks ago, and well, fingers crossed, you went out and shorted BHP and Rio and Fortescue and made a mozza and pretty happy. If so, write a comment in YouTube underneath. I'd like to hear from you if you have had a crack at it, but also consider joining one of my services. I mean, this is what I'm doing. I can only prove to you with this show and tell what I'm doing, and how many good ideas do I need to dish out before you'll consider joining and getting the ideas in your inbox, the actual trades as they come through. So, looking at where iron ore was a couple of weeks ago, up around 118, 120. And what's happened since, look at that. It really is starting to accelerate to the downside now. A very sharp move. And there could be a lot more to come, as I was saying in the update a couple of weeks ago. So it feels like the ball is rolling, and yeah, that's going to affect the ASX as well, as we're seeing. And I'll show you the ASX now that things are rolling over. The little bit of a dangerous situation, the false break that is lining up. So, the analysis I gave you was that this long-term uptrend was under threat. This is going back to 2016 in iron ore, that we'd already seen a couple of waves to the downside, that I had seen the selling pressure from the sell zone, that we'd seen an ABC correction to the upside, where I'd expected to see selling pressure, and then the failure, the sell pivot, kicking off the potential for more downside, and really looking at a third wave down, with this being the first, this being the second, and potentially we're facing the third wave down. And I was saying, when iron ore turns down, watch out. It can, the pace of the decline can really catch everyone off guard. And that was really what I was pointing out a couple of weeks ago. And I think, that is starting to be borne out, isn't it? Back through that 20-month moving average, really that momentum shift, and the selling pressure really starting to pick up steam. So, let's have a look at Fortescue. So this is Fortescue mining, and when I told you about this a couple of weeks ago, they were trading up at 26 bucks. 2 weeks later, down at 23.67 and looking pretty dangerous to the downside. The way I analyze Fortescue here is that you've got this strong trend to the upside, big correction that occurred a couple of years ago. And we've had, recovery back to take out that high. And so I'm looking at this as sort of a major false break of that high. So the way I look at that is I'm looking at that range and really analyzing the correction that you can see there. So you've got this big correction. And again, I've told you there's areas inside the range where you can expect to see resistance. And there's also areas outside the range. So 25% outside the range where I also expect to see resistance. So the way I'd analyze that after a big correction is we have this big point of control around 20 bucks. And sorry, I'll do that again. Point of control around 20 bucks on that correction for Fortescue. We've had lots of work done. There's your buy zone. There's your sell zone in the range. So we've had a bit of work done there over the last couple of years. We had that little blast off at the start of the year with iron ore being so strong. And then we've had the reversal and the false break. So you've got like a sell pivot there and also failing back below the high of the range. So now really expecting to see mean reversion. So really expecting to see it head back towards that $20 region and look perhaps lower if iron ore really does get dumped. But just Fortescue really coming off the boil. Looking at Rio as well. It's a similar sort of a picture of retesting a major high. This is, again, a long-term chart. That was a high from a couple of years ago. So Rio not really taking out the high. So it's sort of a double top would be the sort of technical term. And we've got the monthly sell pivot there last month. So Rio going from about 125 bucks down to 116 in the last 2 weeks since I sent out that warning to you. BHP in a similar situation with the retest, of a major high. It's been bouncing along, trying to get above 50 bucks for quite a while. We had another spike at the start of the year, and then we've got the monthly sell pivot last month. So basically I had, iron ore giving a big sell signal, and we also had monthly sell pivots in BHP, Rio, and Fortescue Mining, which was really adding to the bearishness of the whole setup. And, 44 bucks or a bit higher at the end of last month, that's down at 42. So, looking at that, it's sort of a similar situation of, looking at these corrections in the past and sort of expecting at least to see, back to that point of control and potentially all the way back through to the buy zone, which is where it got to in the past. So, possibly all the way down to 36 for BHP in the short term. So when you've got things like that happening in the big picture, that's about 15% of the ASX 200 you're talking about with Fortescue, BHP and Rio. So if we have a look at the ASX 200 and have a think about what it's been doing, it's been trying to break away from the range it's been in for the last few years. And I'm just always, wary when markets sort of break out and then fail to carry on. So, we've had years of this sideways motion. So here was a correction from, 2021, 2022, and we've been going nowhere fast. And we've got the point of control of that for the ASX 200 around 7,000. And, the last few months, we really only had one great month, which would be, I think that's November, where we had a really strong rally and then it's just sort of been grinding higher ever since and trying to break out and look fabulous. And again, you'll see that level 25% above the range where I'm, getting a bit wary. And we're seeing the false break. So the attempt to break out, getting people bullish, and then potentially a false break of that high, which could lead to more mean reversion back down to sort of 7,000. So that'd be 600 points. Right? That'd be a near 10% fall in the index if we fall back into that range. So with iron ore getting belted as it is and looking like it could sort of go into a bit of a free fall situation, quite frankly, we may be in for a bit more downside and, retesting the moving averages, I guess. It may just be a retest and then another breakout down the track in a few months, depending on what rates do. But looking at the US 10-year bonds, I mean, this is a very important chart for the market overall, this US 10-year bond yield chart. And so, we've had the bullishness of those rates really dropping expectations. We're at the peak and we still could be. 10-year bonds dropping from 5% down to about 3.8%. And, that really has come off the boil recently, where you've got from, this is December. So this is December 23. So this is just this year where we've actually seen rates starting to creep higher. So from 3.8% to the current level around 4.3. What I'm just pointing out is that, just recently, the last few days, we're heading back towards 4% and it's just poking back up to 4.3. Inflation's still, not totally under control, starting to creep back up again. So that's the sort of wild card that we're facing, I guess, what rates do from here. You could say that you're starting to see potential on the daily of, an uptrend in these rates. If they break back above 4.4%, all of a sudden the market might be thinking, what's going on here? Maybe we're not near the peak in rates. If growth really is flying and inflation does take off again, maybe we're not at the peak in rates in the US. This is still early days. So the path of interest rates is definitely something to watch and be wary of. Look, anything can happen. I'm, not going to say I know what's coming next on that front. If we look at just the range down in those yields, sorry, I'm making it a bit messy, aren't I? If we just look at that range from that 5%, 3.8, I'm just looking at that point of control. Again, 4.4%. It's sort of a bit of a linchpin, I think. If you see those 10-year bond yields going up through 4.4%, well, you sort of have a target up towards 4.7. And then the market may be getting a bit nervous. So for the moment, I'd probably like to see those rates keep a really more bullish footing. Those rates stay below 4.4% for now. So this may just be a little bit of a scare and things turn back down again and bonds rally. But be prepared for those rates to actually kick higher quite quickly if they go through 4.4%. And that may just mean that US stocks might start to struggle a little bit, but they've been just strong as an ox. So that's not saying much, is it? But our stocks down 100 and odd, however many points today after a big sell-off end of last week on the back of iron ore. That could be a bit of a theme just coming in the short term, that we'll be in a bit of a correction mode. All right. Well, I think that's enough for this week. Hopefully you made use of that call in iron ore, or if you watched it, you've been suitably impressed to investigate a bit more and become a member of either Retirement Trader or Microcap Trader. All right, cheers.